Are you ready to refinance? That's what we're here today to talk to you about. So first off, let's talk about what is a refinance. In the simplest terms, we're just readjusting your mortgage. Maybe we're trying to get you a lower interest rate or shorten the term on your mortgage, maybe go from a 30-year to a 15-year. And in some cases, we can look to maybe even take cash out when we refinance to consolidate debt, pay off student loans, anything you want to do with that, that cash out. So when's a good time to refi?
Yeah, so a lot of times they're kind of like there's two big buckets. One is when it just makes sense. Sometimes financially, we can just do the math. Hey, here's your how much is coming off your payment with the interest rate. Maybe we're eliminating mortgage insurance based on a certain type of loan, and so we can kind of just do the basic math on hey, this just makes sense. You're going to be here X amount of years. Your break evens at X amount. You're in good shape. The other just basic bucket is doesn't matter what math and whatever. At the end of the day, if someone just needs financial relief, whether it's extending out a term or taking the cash out to pay off a debt, whatever it might be. So it's kind of a when the math makes sense when the refinance. The other side is when it just maybe there's this emotional need a little bit of a relief in someone's current payment. So.
Yeah, and we're all hearing about interest rates going down a little bit, and the Fed maybe making a interest rate cut soon. We've talked about how that kind of indirectly affects mortgages, but it really just what makes sense for you in your interest rate reduction. My general rule of thumb is if we can get 1% lower and you plan on staying on the house for 2 to 3 years, it probably makes sense. But there could be other circumstances that makes it a good opportunity for you. So what kind of refis do we have?
Yeah, so just like you're saying, like some of when it makes sense, there's certain types of loans that maybe it makes a little sense, even if you're just only a 0.5% better. If you have a government loan, the FHA loans, the VA loans, they on our world are kind of considered to be like modifications because they're government loans. Very little, pretty quick and easy. As long as there's a net tangible benefit, as long as you made kind of meet minimum seasoning requirements. Seasoning is just certain amount of payments after you purchased the home.
No appraisal?
No appraisal. Sometimes really no credit. They just kind of monitor see if you made your last mortgage payments on time. And so those are nice, quick, easy government type loans, and then of course the conventional, cash out, type loans. A lot of a little bit more options, a little bit more process to get approved. Normally got appraisals involved, but a little long term can be a better route for people to go.
Yeah, if you got a mortgage over the last couple of years, there's a good chance your rates are probably in the 7 or 6%. We're hoping to see those rates go down to 5. So maybe it'd be time to take advantage of it. I think rates are going to trickle down a little bit lower. You may have been seeing a lot of interest in refinancing right now. For me, we're going to get everyone ready, but let's hold the line a little bit. I think they're going to drop a little bit more so we can take advantage of it.
Yeah, but like we always, it's an easy, quick conversation. Even if someone's just curious, hey, is this the right time for me? Maybe you forgot what loan type you had because a lot of times when you're full blown buying a house, really not always paying attention. But so even if you're just curious, hey, would it even make sense to do something now? How can we better prepare ourselves for whatever it is? A little bit maybe bigger difference on the rates. We'd love to just talk it through, strategize with you.
Absolutely. And like my man Tyler said, there are costs associated with refinances and they're different based on your loan type. So we want to make sure that net tangible benefit makes the cost, not just a quick interest rate reduction, because we want it to be a long-term financial investment for you. So how do we get started for your refi? Well, if you're already one of our current clients, we'll be reaching out to you to start talking about that process. But if we haven't done business with you, definitely feel free to reach out. We can kind of look at your current mortgage situation. We can actually go ahead and get an application started and just kind of see like when that great point of when the rate gets there that we move forward on it. So let's do all the prep work now. So when it is that time, we can get moving for you. But if you have any questions about refinance, holler at us.
Let's go.